Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy Grain Marketing. Um, Today we're going to talk about, this is old news at this point, but China's purchase of US beans. We're going to talk about vegetable oils in China as well. We're going to talk about some currency or some interest rate announcements and a little bit more. So let's get right into what happened in markets today. Canola was up $1.80 a ton at 640.60. Minneapolis wheat was down 1.25 cents at 561. Kansas wheat up 2 3/4 to 522 3/4. Chicago wheat up 3 1/4 to 532 1/4. Soybeans ended up down 0.75 cents at 1094.50. That's over the January. Corn was up 2 cents to 434. Soybean oil was down a tenth of a cent at 50.16 cents. Canadian dollar rallied 16 cents today. It was up higher than that even after the announcement, but we'll get into that in a second. Live cattle was up 433 to 230.90. Feeder cattle up 915 to 334.03. All right. Again, this is pretty much old news if you are following headlines today. China has bought 180,000 tons of beans from the US for December and January delivery, or December or January delivery. This, of course, comes shortly before the summit of leaders, Donald Trump and Xi Jinping. 180,000 tons is 3 cargoes, so not a huge amount. But if the leaders can come to an agreement, there's opportunity for more. Here's the problem, though. The prime U.S. soybean export season normally runs from October through January. China, which takes more than 60% of the world's soybean imports, has nearly completed booking cargoes from Brazil and Argentina through November. Brazil's harvest starts to come in again in January, which means the U.S. may have missed out on most of China's oilseed crushing business. However, China could still take about 8 million tons of beans for its strategic reserves in the period from December to May. Overall, we still feel that a trade deal struck this week would be a net positive, but today may have been a buy the rumor and sell the fact kind of day. There's also been other trade talks that have resulted in good results. The U.S. president made a final stop on a 5-day Asia trip today. He held some trade talks with South Korean President Lee, and I think the words were dramatic progress helped break the tariff impasse, and Trump expects to cut China tariffs released as a result of the fentanyl trade. So overall, this week has been good for trade, been good for trade deals. It's been good for Trump's standing in the global trade world, and we saw a lot of this run up through the week, even from last week and through the week. So again, traders might have been exhausted adding to their long positions or maybe taking profits today as a result of some of these announcements. So here's what the soybean chart looked like today. As you could see, it was relatively unchanged. We saw larger gains yesterday that punched up above $11 per bushel. As you can see here, this is the 5-minute chart of just the kind of day session here. We did see that big jump at 8:30 this morning when the market first reacted to these cargo news. It did trade relatively higher than what it was trading prior to the open today. So it did eke out a bit of a loss, but we're still higher overall. We're still close to the top of the range, I suppose. So we could just be seeing again that buy the rumor, sell the fact kind of thing. If we do see additional cargoes come in, that might help rally markets, more. Here's what's also happening in soybean meal. Now, we've been mentioning soybean meal and the rally in soybean meal here. But we haven't really gotten into some of the reasons for this. There is a historic or a seasonal factor here where bean meal tends to rally through the final 2 to 3 months of the calendar year, kind of getting out of those post-harvest lows. There's also some evidence here of short covering by traders. Non-commercial traders have been rapidly covering that short position, and prices have pushed through some key moving averages like the 50, the 100, and now the 200. We're also starting to see this 20-day, 50-day crossover. That's also a bullish signal from a technical standpoint. Essentially, the market here may have been oversold, and a technical bounce kind of kicks in, and the fundamental story then supports it, at least in the short term. So, of course, a rise in the products of soybeans also help the rise of the soybean itself. So there's some carryover there as well. Let's look here at canola. It's been much more muted in gains compared to, say, soybeans proper or even soybean meal. We have been seeing even some underperformance against some other canola products like Euronext rapeseed. That today closed above the 200-day moving average. That's a positive sign for that particular futures market. We're also seeing some weakness in the vegetable oil market as well. This is Dalian or Chinese palm oil futures. This reflects a mix of supply easing, weak demand signals, and just kind of broader market, headwinds. For palm oil, the Malaysian data shows that stocks are actually rising more than expected for the seventh straight monthly increase in stocks, which is weighing on futures. Now, palm is a big part of the vegetable oil market. Soybean oil is also under pressure. This is Dalian again, Chinese soybean oil. Since the feedstock of soybeans have been developing, and demand for higher cost oils is under stress. So we're seeing a pullback all over in the Chinese markets. Here's Dalian rapeseed or canola oil futures as well. So we've been seeing a decline since the beginning of October in this market as well. Not that China and the canola market are essentially correlated at this point, because Canadian canola oil and canola meal are not going to China at this point, so they're getting their supply from elsewhere at the moment. Just wanted to mention it though, because it is a large market, and what happens in those futures markets there matters. So again, we are seeing gains in the Euronext rapeseed. That is more muted in the canola, but we still did close the day at a higher close than we did yesterday. So that's positive. We also closed above the 50-day moving average. And as you can see, the 20-day moving average is kind of turning the corner and moving higher. We'll probably see a 50-day moving average cross here in the next few days. All right, let's move on to wheat here. We did see some continued gains in hard red winter wheat today. A little bit more muted, but we did end the day with a gain over yesterday's close. I think that's a positive. We see the same thing in Chicago wheat here. We're kind of coming up to resistance in the form of the previous high in mid-September. We're coming up to the 100-day moving average in Chicago wheat as well. Unfortunately, that's not necessarily translating the same into spring wheat. We actually saw Minneapolis spring wheat close lower today. It's been very flat over the last few days. Even the rallies in the winter classes haven't translated very well into spring wheat. There is a bit of a glut in supply here because of the northern hemisphere harvest, particularly in Canada. In our markets here. So again, it's just a bit more of a muted market, and we'd like to see it rally more. We are seeing basis prices rally more in order to, for the Canadian elevator systems to kind of secure some supply. That isn't really happening at a fast pace, not as fast as it was for canola anyway. So we do want to move some news to India. There is some overperformance, I guess we could call it, on the monsoon rains late in the summer crops. The summer grown crops such as soybeans, cotton, rice, a little bit of pulses, but most of the pulses are in the winter. Some vegetables as well. Those mature from September on, and September saw rains 15% above average this year, with some regions getting as much as 115% more than normal. So now farmers are scrambling to harvest summer crops ahead of the winter sowing season, which is set to begin next month. But ultimately, more Rain is forecast this week and could delay planting and damage late maturing summer crops. So, just to give some context, pulses such as chickpeas, lentils, peas are generally grown in the rabi or winter season in India. So during this time, they do thrive at that point with cooler weather in the winter months after the monsoon season has ended. But the delay in planting may have an effect on that winter crop as well. All right, let's turn to some interest rate news. The US Fed cut interest rates by a quarter percentage point today and announced it will restart limited purchases of Treasury securities after money markets showed some signs that liquidity was becoming scarce. This is a condition the US central bank has pledged to avoid. It wasn't unanimous. There was two that voted against, and I didn't look into it, but I'm assuming they wanted more cuts than what was delivered. But the Fed did also temper any further, or they want to temper any further decline in the job market. So we may see another decrease in interest rates in December, but they're struggling to reach a consensus about what lies ahead for monetary policy. And I don't think the financial markets are assuming that another interest rate cut will happen by the end of the year. This was laid out in the afternoon, but actually this morning, the Bank of Canada lowered their interest rates as well by a quarter percentage point. And they also signaled a possible end to the easing campaign. So, while Macklem or the Governor Macklem left the door open for further easing if necessary, the bank's guidance steers away from that scenario as the base case now. So the result is somewhat more hawkish outcome than had been expected, with the loonie bouncing higher as a consequence. For those who don't know what hawkish means, it means more of a interest rate tightening or a stay of the same interest rates, meaning less opportunity or less likelihood of further cuts. Cuts are considered dovish. Gains in interest rates are considered hawkish, if you weren't aware of that nomenclature. Here's what the Canadian dollar did today. Again, it did shoot up to about 72 cents this morning, but it did back off as the afternoon went on. We are seeing a trade above the 200-day moving average there, and we did see it close above yesterday's as well. So, the Canadian dollar rallying on a day that we lower interest rates is interesting, and it's all about the statement, right? If we're hawkish here in Canada and a little bit more dovish in the US, that rallies our Canadian dollar. All right, if you want to see our premium content, go to CanadianAgMarkets.com/subscribe to get all of our information, including our morning analysis, our weekly in-depth stuff, and our timely, accurate, or actionable information. We sent out some of that on wheat this week. So go to CanadianAgMarkets.com to subscribe. And if you're not subscribed to this YouTube channel already, please do so because we really appreciate it. So thank you for joining us today. We will see you again tomorrow.